Okay, so the bank reconciliation statement. The purpose of the bank reconciliation statement is to fix any errors which might have been made in the bank statement for the previous month. Usually you'd say what month it is for year on top. So that's why you'll say I labeled this bank reconciliation statement of Keith. And it's like a dash for March 2020. Um, so as I said, it is the purpose of this whole thing is to adjust any errors which were made. It is also made to capture any transactions or to record any transactions which were made in the cash book but which do not reflect um, in your bank statement yet. Things such as checks which you might have written out, which someone might not have been presented to the bank yet, or any deposits which you have received but you didn't deposit it yet to the bank or to the bank, or they didn't record your deposit yet. Because sometimes human errors happen, and even though you deposited something, it might not reflect on your account. That's why it's always important to keep your bank or your deposit slips. And then obviously to do your errors and stuff, but I'll go down one by one for them. So when you start your bank reconciliation statement, it's important to note that it only has two columns. And these columns aren't your debit and credit. That's why you see I didn't label them debit or credit, because the debit and credit that technically doesn't exist in here. And when uh, a balance is either debit or credit, it will be shown. So usually if a balance is just written in, an amount just appears, then it's regarded as a debit balance or a positive balance. If there's a negative sign in front of it, or if it appears in brackets, then it's a negative amount or credit amount. Anyways, so when we start off with your balance as per bank statement. This amount can be found in two ways depending on the exercise at hand. Either the lecturer or the instructor will directly tell you, okay, um, the bank balance shows a positive of $2,000. So then you know, okay, your bank balance according to your bank statement is positive. Or it can say it shows a negative balance or an unfavorable balance. So then you know. So when it says negative or unfavorable, usually the amount that you enter here in the last column would have a negative sign in front or the minus sign in front, or it would appear in brackets. I prefer using the minus sign in front if it's a negative number, because then you can clearly see and remember, okay, no, that's a negative number. So when you do your calculations, you can easily add it into your calculator without making a mistake. Because if you use the brackets and you enter the brackets into your calculator, the calculator will assume you're trying to multiply something most times. Or depending on the calculator you have, it might recognize it as a negative number. But nonetheless, so you start off with your balance per bank statement. If they directly tell you what the bank statement amount is, okay, good shot. If they want to be complicated, they'll give us a completed bank statement with a lot of amounts. And then you have to use the balance at the very end of the bank statement to enter here. So the very last balance on your bank statement gets entered here. The reason for this is, once again, you already captured all of your other transactions and you're just trying to edit or you're trying to adjust, you're trying to fix any mistakes that occurred to that final amount so you can find your true amount. So that's why you use the last amount. So if they give a bank statement, then you look for the last amount of or the last balance in the bank statement, and that's what you would enter in here in the last column. I forgot to mention earlier. So this whole layout, there's no easy way around it. You have to learn it off by heart. Hopefully, if you know what each of these things mean, it might make the work a little bit easier. So, yeah, let's continue then. So the less checks. So after you enter your balance as per bank statements, you would say less checks. The word less in accounting then obviously means you have to subtract the amount. So when you have your less checks, they might again tell you which checks are outstanding. And then it's easy, then you just record the check number, whether it's check number one or check number two, and then you enter their amounts into the first column. The reason for this is you need to add up these two amounts and then you add it here. because you need to, at the end of the day, subtract this amount from the top amount. So the reason for this is it's your bank statement. So you wrote out the checks to your creditors or to your suppliers or whoever. So you already gave away that money for one or other reason. So you already recorded it in your cash book, but it's not appearing in your bank statement yet. So you need to record it in your bank statement. That's why you say less checks, because that money is money you don't have anymore. So you need to subtract it from your original amount. So that's why it's less checks. So after you do your less checks, you have to add your outstanding deposits. Again, they might tell you what the outstanding deposits are. Then you just enter the deposit number one or deposit number two, followed by the amounts. Then you enter your amounts and then you add them up and you write your total amount here. Um, so the reason why you add your outstanding deposits is, again, in your cash book, you already received the money and you wrote that you deposited the money to your bank account. So what most often happen is some deposits take a while to reflect on the side of the bank. They take a while to be processed, or sometimes human error comes in and a bank teller might not process your deposit. So it gets lost in the process. So this is why you add it, because it's a deposit. It's money that you are putting into your bank account. That's why you say add outstanding deposit, meaning the amount should increase. So that's why it's add outstanding deposit, because your business or your trust bank account, it's increasing by whatever amount you enter in here. So that's why it's add. And then lastly, and this is the complicated one, it's your less, or you either less bank error or you add bank error. It's one of the two, or it can be a combination of the two, but then you write them underneath each other if you have less bank error and then add bank error. So when you have a less bank error, something might have happened where the bank gave you too much money. Say, for example, you had a check for $50,000 and the bank recorded it as a check for $500,000, which means the bank gave you $450,000. Unfortunately, it's not your lucky day. You didn't just score $450,000. That is still the bank's money and they will take it back. So then you would say less bank error and then you put in the 450,000 Namibian dollars, which you have to give back because they will subtract it one way or another. And then in the case where you add a bank error, it could be something like where the bank um, makes a smaller amount of what you actually owed. For example, again, say for example, you got a check for 500,000 Namibian dollars and they instead entered it as 50,000 Namibian dollars, which means they owe you 450,000 Namibian dollars. It's an error on their side. So when you add bank error, then you have to add that $450,000 because you got a check for 500,000 Namibian dollars. They only recorded it as a check for $50,000, so they owe you 450,000 Namibian dollars, which is why you would then add bank error. So you have to look carefully for your bank errors. Most times they will stipulate, okay, no, the bank made an error of this or that. And then you can determine from the instructions whether you need to add or deduct the bank error from your bank account. So all of this is your bank account. You're just working with your bank account. So either you get money from the bank or they take money from you based on their error. This is solely on them. This isn't a cash book error. Everything in your cash book is fine. It's right. It's so it's supposed to be. The bank messed up. They need to fix their error. And that's why you have this thing right here, the bank error thingy. So then when you're done with it, you draw your final calculation line. And you're actually supposed to make a double line underneath here. I forgot to make my double line now. Or you can leave it like that, but it's always good to make the double line so you can know, okay, this is my final answer. And then the amount you have here is your balance as per bank statement. I know many people write balance as per cash book, but the correct way, in my opinion, would still be balance as per bank statement, because all of this, you're trying to fix your original bank statement. You're trying to fix the amount you had up here, because this isn't a true reflection of your actual amount. So after you do all of these calculations, you then find your true bank statement balance. So therefore, I label this as balance as per bank statement. And then you have your balance as per bank statement right here. It's important to note to always make sure about whether or not your balance as per bank statement is positive or negative. Then you subtract your checks. You shouldn't add them. If you add them, it's important to note these things because it's little mistakes like this. If you go and add this, your final answer will be incorrect. So your things won't balance up. So yeah, then you minus your checks, you add your outstanding deposits, and then you either add or subtract the bank errors which are present, which will then give you your final balance for your bank statement.